spiace che penso che sono le sole persone qua
sono
oggi che non parlano italiano, allora tutta la presentazione oggi, dopo questo momento in inglese. Seriously, everything else is in English. Thank you very much for that introduction, which I almost understood. There was something about dating, which I'll ask you about later. But I'm here to tell you three things, really, in my 15 minutes or so. I'd like to explain to you, just for a few minutes, what Hand in Hand do as an organisation. I'd like to take a few minutes to talk about philanthropy and how it's changing today at a very basic level. I go first amongst the organisations, so I get to talk about all the basic stuff, and the complicated things come later. And then I'm going to tell you about one initiative we're involved in at the moment, which is our Business Incubation Fund. And if I start talking too quickly, just give me a little gesture and I'll slow down. Allora, Hand in Hand. The first thing to say is Hand in Hand is not one organisation, it's a family of organisations around the world. I'm from Hand in Hand International, which is based in London, and we are the fundraising, technical support, expansion, coordination office of the family. We then have independent organisations in the countries where the family works, regional hubs, if you like, from which we then manage expansion, and those are the hubs: India, Afghanistan, South Africa, and Kenya. But we are all united around one thing, and that's my first bullet point, and that is a focus on job creation. The founder of Hand in Hand is a man called Percy Barnevik, who was mentioned earlier. He was chairman and chief executive of an organisation called ABB, and also chairman of AstraZeneca, on the board of General Motors, a global businessman who had for a long time been frustrated in the lack of, I guess, business focus as part of philanthropy. And Hand in Hand's mission is really to change that by focusing exclusively and really closely on the things that can lead to the creation of jobs, enterprises, businesses, employment. I mentioned the hub offices. These are the places where we're working at the moment, and in green also the places where we're lucky enough to have supporters or networks of supporters. So how do we do it when we talk about this focus on job creation? Well, there are four cogs, four parts to the hand-in-hand model. Often when people think of job creation, business development, they think of microfinance. I myself used to run a microfinance institution working in Southern Africa. And what happens when you focus on microfinance, and there are many excellent microfinance institutions we know, like, and we partner with, but from our perspective, what we think is if you focus just on microfinance, the presentations tend to have numbers that are the size of the portfolio. We loan 100 million here, we loan 200 million here, and not on actually what the impact is on the ground. So our first indicator is not the size of our portfolio, it's the number of jobs we have helped to create. And that's why microfinance is only one of our four cogs, if you like. The core of what we do is we work on a self-help group model. It's a relatively common expression, self-help group within development, and it's the principle of a group of 15 or 20 people, mostly women. Some people think of the Grameen model, Mohammed Yunus and his Grameen Bank, working together for common purposes. So in our situation, what happens within our self-help group is, first of all, they set up their own little bank, the world's smallest bank, 15 people who all contribute savings and take loans out of what's known as a merry-go-round or table banking. And that works internally, it doesn't need any external support. But then by having a self-help group, what happens with these groups, mostly women for us, is that they support each other with their other activities, with their businesses. And what it means for us is that when we provide training, moving on to our step number 2, we can train people in groups of 20, which is obviously far more cost effective, and you'll find different people are at different skill levels within those groups, so the skills stay within the community. In many societies, the concept of these self-help groups is relatively well established now. We're not pretending we came up with the idea of self-help groups, but it is at the core of being able to create jobs from our perspective quickly and efficiently. Microfinance. We provide some microfinance, and we'll come on to that later, particularly in India, which has been really our main, the vast majority of our microfinance to date. But we do far more linking to microfinance. So in all of our operations, if a group needs credit, our first question to them will be, are you sure you need credit? Because actually you might be able to finance your business better through savings, through other formats, through family, through reinvested equity, if you like. But then where there are existing microfinance institutions, and in Kenya, where we work, there's a flourishing microfinance market. If possible, if a group is sophisticated to an extent where an existing microfinance institution will take them, we link people up. And then we only look to provide microfinance where there is a gap, a market inefficiency gap, if you like, something that isn't being provided currently that we can help with. And this final fourth point is a big thing for us at the moment. We look to provide additional value-added training over and above our core business training. Our core business training, by the way, point 2, we sometimes call it our mini MBA. It's probably not as good as the training you get here, but it is a 3-month, 12-week course on entrepreneurialism, business training, and that's the heart of every hand-in-hand country. But then in this point 4, what we do is some specialised training, things like skills training for a particular industry. Sometimes it's linking people up with existing trainers in an area. We'll also look at an overall market, for example, the tea sector, and whether we can help make the market more friendly for the smallest entrepreneur, the bottom billion, the poorest people within society who are acting within that sector. So that is our market. This is what we've achieved. I mentioned that we look at people first, jobs created, jobs assisted, rather than credit. Hand in hand have helped to develop or create over 700,000 jobs. It's coming on for 800,000 now. Our founder, Percy Barnevik, is known for many things, including thinking big, and that's why we have a long-term target of 10 million jobs in the next 10 years. And our work is now to ramp up and grow this around the world, and that's one of the reasons we have this structure with regional bases. I've talked about Percy, and Percy is probably the best known person of Hand in Hand, certainly the best known. But I also just wanted to mention our chief executive, who we're lucky to have, is a chap called Sven Sandström. He was managing director of the World Bank, which is the second most senior position beneath the president. And I guess this is just to say we're a very lucky organisation that we organisationally try and mix the best of business entrepreneurialism with the best of administration and management, which I think Sven represents. But that's big picture. Just to finish on what we do, let's come to one particular group who I met 2 weeks ago when I was in Kenya, Kanini Kega in Machakos region, for anyone who's been to Kenya. Quite an arid farming part of the country. That's what the women look like, and I wanted to give you some examples of the entrepreneurialism we see. This is not a wealthy group, but through some training, through some innovation, they produce their own peanut butter. And it's good peanut butter. I was brave enough to try it. We're helping them now with their branding and where they sell it, because you can see at the moment they write with a pen, which is not high quality branding, and with a small amount of assistance, the group, I think, can sell this in much broader markets. Many of them are involved in dairy farming. It's a dairy region, that's a staple, but they don't stop there. Some of them then move on from dairy farming into biogas. So making the most of the byproducts of cows, and methane gas is an important byproduct of cows. I won't talk any more about that. So those are the kind of people we help. Moving on to the second thing I wanted to talk to you about, and that's philanthropy today. I think Tom said I'm an ex-management consultant, so I can't give a presentation without putting some circles and diagrams on the board, and I'm sorry for that. But I guess the reason why we're here today is because 20 years ago, had people been talking about development purposes, these two things would have been seen as quite different still. Donations, everyone understands what donations are, and then many of the same people were also involved in their investment world, but the two didn't really meet. And increasingly what you see today in some quite interesting ways are people who are experts in investments thinking, actually, how can we take structures that are more leveraged, more sophisticated than straight donations, and apply that to the world of development. It's obvious, really, and much of this is things you will know already. We'll talk about one thing that Hand in Hand is involved in at the end, which I guess fits into the category of soft loans. But I wanted to give a couple of fun examples. I'm from England, so a couple of good examples from England of innovative forms of modern philanthropy. There has been a lot of talk in England recently about social impact bonds. And this is actually the first thing to say about social impact bonds is it's a terrible expression because it's almost like equity. It's more like equity than a bond. But this is where a group of private investors will pay for a project that's commissioned by probably a public body. In the UK, the government promised to pay for a project to reduce reoffending rates in prisons. So it's a social project with defined social outcomes. And the financial structure, when I say a promise to pay, was that private investors paid for the project in the first place, and the government promised to repay that money with a return, and an equity-like return, in the event that social outcomes were met. So if reoffending rates go down, the government will pay the money back to the investors with a return. If reoffending rates don't go down, and the private investors were wrong about the concept, they lose their money. So it's like a business startup, but with a social impact result. And it's proven to be quite exciting within the world of philanthropy in the UK, because the potential for people to solve problems with more broader, more exciting structures is obvious. It depends on your risk profile, I suppose, because you have to be prepared to lose your money. But there have also been examples of things quite similar to what we're doing. So a big disability charity called Scope has listed disability bonds. There's 20 million of bonds which are to pay for some of their services where the actual service users pay for those services in the end. So there is income linked to the social impact, and that's being used to repay investors over 2 to 5 years. It's a small return, it's not a commercial return, but again, instead of people with a philanthropic outlook saying, here's some money and I'll give it away, it's people saying, well, hang on, I can give this money and I can get a return, and it's an investment, and that suits my risk profile. Maybe I want an equity-like risk profile, maybe I want a soft loan risk profile, but I might want more than a donation. And I think if there's one message that I'd like you to take away from today, you will be aware of these things, otherwise you wouldn't be here today, but it's that every month, every week at the moment, we're hearing about new examples of ways that philanthropy can be effective without it just being about straight donations, and that to me is where the future lies. Which is a perfect point to come on to my third thing, which is hand in hand. I mentioned at the beginning our involvement in microfinance, and it's really important to re-stress this point that our self-help groups essentially are encouraged to finance their businesses without recourse to financial institutions wherever they can. I own a small business myself. Wherever I can finance it without a bank being involved, it's better for me, and we say the same thing to our self-help groups. However, clearly, as anyone involved in business and entrepreneurs and will understand, sometimes you need more capital. And that's why we're setting up a business incubation fund to assist our clients where there currently isn't that service. And we're raising funds from modern philanthropists who are prepared to lend money to us. The first country where we are doing this is Kenya. We are looking to raise $1.5 million of loan funding, and we're doing a couple of things really that aren't there in the areas where we work in Kenya at the moment. First of all, we're providing loans that are genuinely structured for a business. So if you were a small farmer in Machakos, I don't think any of you are small farmers from Machakos, but if you were a small farmer from Kenya, and you came to us, we would give you a loan with a grace period at the beginning, a 3 or 6 month grace period, because if you grow a crop, you can't repay that loan 2 weeks later or 4 weeks later, you need 3 months or 6 months. Now, very little microfinance looks like that at the moment because it's perceived to be risky. So through our fund, it's a business fund and it's structured to suit the business needs of our clients. We're also providing smaller loans to people who even microfinance institutions don't want to work with. People think of a microfinance sector as well established now, but microfinance is like any form of finance. You want the most reliable clients possible, and often those are the ones that aren't at step 0 or 1, they're at step 2 or 3 along the ladder of development. So we're providing loans to people who can't get loans from other institutions for their business if we work with them and if they've gone through our training, and then when they're at a certain level of maturity, we're delighted to hand them over and graduate them to another institution. The type of money we're raising, and this is something I would be delighted to talk to any of you about further afterwards, it has a small interest rate on it, so a coupon of 2%. We are asking the lender to take on some of the potential for default risk. We take on a proportion of it, and we ask the lender to take on some as well. And I wouldn't get too much into this, but one thing you will know about microfinance is it has traditionally very high repayment rates. 99% is standard industry in Kenya, so we hope that defaults will not be an issue, but the risk is shared there. We're looking for money either denominated in shillings, which is the local currency, or in US dollars, and it's a 5-year term to give us time to set up and run this fund effectively. It's not rocket science. In fact, you will find more sophisticated forms of microfinance investments out there. But I'll finish maybe with one of the areas we started with. Right at the beginning, I think it was spoken about that we're looking at heart, core, head, and management capacity. Our organisations on the ground have all of the heart and the head, but actually what we're doing is providing, as well as the funding, the management capacity, and as well as this being a loan to set up lending, it's also a loan to train an organisation that hasn't been doing lending up to now in how to manage funds, how you actually do lending when you're not from a lending background. It seems sensible to those of us who have worked in banking before, but if you're a social worker by background or a teacher by background, and many of our staff in Kenya are, actually this is quite a big step. So those people that are investing in us are not just helping to provide loans to people, they're also helping to provide management capacity. And on that note, I will finish, but it would be silly of me not to finish without saying, if those of you are interested and you're thinking, is this really something that would be worthwhile or of value to me, I'd just pause and think of your approach to philanthropy at the moment. There may be people here that are used to giving $5,000 or $10,000, and I would just encourage you to think, instead of giving away $5,000 or $10,000, what if I invested $100,000? Or if I usually give away $50,000, what if I invested $500,000? And what could that money do? $100,000 of money lent to us will enable us to give 2,000 loans every year. Over 5 years, that's 10,000 loans. That's 10,000 people helped for an incredibly cost-effective amount of money. And that's why I hope some of you will be running up to me afterwards and asking me about our Business Incubation Fund. Thank you very much, and mi dispiace che non era in italiano.